everyone. Next, we have CoTec. It's an ESG-focused company investing in innovative technologies that have the potential to fundamentally change the way metals and minerals can be extracted and processed. As the company transitions into a mid-tier mineral resource producer, it will apply those technologies to undervalued operating assets and recycling opportunities to generate revenue. CoTec is committed to supporting the transition to a lower carbon future for the extraction industry, a sector on the cusp of a green revolution as it embraces technology and innovation. The company has made 4 investments to date and is actively pursuing operating opportunities where current technology investments could be deployed. CoTec is publicly traded on the TSXV and on the OTCQB and trades under the symbol CTH and CTHCF, respectively. Please welcome its CEO and President, Julian Treger. Nice to see you, Julian.
Lovely to see you too, Anna, and thank you for that great introduction. I think you've covered the presentation, but I'll do my best to follow on. So thank you all for tuning in to watch the CoTec story. It's super timely that we're doing this today because today and this morning we announced that we finally received our DTC approval, which allows for much easier electronic trading of our stock on the OTC, and we hope that that will lead to significant investor interest from US investors. So as Anna mentioned on the executive summary, what CoTec is an attempt, and I think we're succeeding at that, to create a Amazon or a Tesla of the commodity extraction space, where we acquire interests in disruptive and innovative technologies, which are the leaders in their fields. But we're not just a technology incubator. In fact, we're more interested in then using those technologies to extract commodities in a super green way from assets which previously were not economic to develop, assets which had too low grades, which were not large enough, which have been too expensive, they were marginal. And of course, a major and significant emphasis for us is waste and the circular economy. And so, as Anna mentioned, we've made a number of technology investments. We now have a number of asset investments where we can deploy that technology, but we aim in a couple of years' time to be a company with 5 or 6 technologies and 20 or so assets. So the asset piece is becoming more important. And of course, the way in which we approach these assets means that we can produce materials much, much more quickly than that has been possible historically with traditional ways of mining. So we started the business roughly 18 months ago. We acquired a shell company listed based in Vancouver, listed on the Toronto Stock Exchange with significant tax losses. And since then, we've built a business which is well on its way, in my view, over the next couple of years to becoming a multi-billion-dollar business and a responsible commodity extraction challenger to the incumbent players in the commodity extraction space. So the executive summary covers that and talks about some of the investments we've made at a high level. The first one, Magneto, is super exciting because we own over 20% of that business globally, and it's a leader in recycling magnets and taking the rare earths from the magnets and making new magnets from them. And that's obviously a super timely and topical issue in the US. The US government is very interested in countering Chinese influence in this area. The Chinese influence is not only with respect to mining rare earths, but actually more importantly to processing rare earths. And our technology gets around that and is well advanced and will have first revenues this year. We also have another innovative technology called binding solutions, which can make the pellets for green steel without the 1200 degree centigrade heat that's historically been necessary. It can do it at room temperature, and therefore has an enormous carbon saving. We have the rights to apply this technology to waste materials around the world, and we've just developing the first opportunity to do so in Quebec, as I'll talk about later. Then we have a significant stake in a bankrupt iron ore facility, which had almost $1 billion of replacement value spent on it, which we are going to restart using these technologies to produce green steel in the US. And most recently, we've invested in a super innovative technology to extract copper from low-grade resources, which wasn't really possible historically. And we think that will open up an enormous opportunity for us to extract copper from waste and also from low-grade mines, which wasn't previously available. And what's interesting about all these technologies is that they are all low-carbon solutions. They all use not only much less heat, but also much less water. They are much cheaper than historic ways of doing things. They are much more flexible and modular. So they don't require you to spend billions of dollars building enormous plants to capture the lowest cost. Instead, what we're accessing with these technologies is flexibility, is economies of modularity, allowing us to extract commodities in a much smarter way than has been historically possible. And you can see here that as we apply these technologies to assets, we are developing businesses which have long lives, but which will come into production quite quickly. By comparison, the average lifespan to develop a mine these days is 15 to 20 years. Here we're talking about, 2, 3, 4 years max to get into production. So we also think that this is a way in which we can bridge the looming demand gap with respect to the limited supply that's going to be available for critical minerals. So we're super excited about CoTec and its prospects. And, within the course of 18 months, we've effectively developed 3 divisions: a green iron division, which has 2 assets below it, a critical minerals division, which we own 20% of globally, but we also own 50% of a US joint venture with the technology. So, a great opportunity to scale a business in the US. And then we have the beginnings of a copper division where we have the technology, and over the course of the next 6 to 12 months, we'll start to announce the asset opportunities for those. Positionally, we're really very much in the Western camp. Our operations are in North America, South America, and Europe. We tend to avoid difficult jurisdictions. And we have a very impressive board, not me, but the rest. I'm actually a serial entrepreneur in the natural commodity space. I've built several businesses which have been ultimately realized for billions of dollars. And I think this business will have a similar trajectory, but it is going to be a decade-long labor of love. But we have also on the board Lucio Genovese, who is the chairman of a large iron ore producer in Europe. We have Sharon Fay, who was the chief investment officer of AllianceBernstein, Tom Albanese, who was the CEO of Rio Tinto, one of the world's leading mining companies, Margot Nordet, who used to invest in mining for the Canadian Pension Plan, and John Conlon, who's a serial mining entrepreneur. And we have very high governance, very high understanding of the sector, and we approach this not from a tech basis, but from a metallurgical basis, from a mining basis, so we understand the issues. In addition to the board, we have a team of 4 very experienced mining and investment experts, and as the business expands, we'll add to that roster. So, as I said, what's interesting about our business is how quickly we can use these disruptive technologies to apply them to assets and get them into revenue. And we expect to start recognizing revenues this year from some of our investments, but obviously that will just be a small amount. It will grow more rapidly thereafter. And this page, I think, emphasizes how we can leapfrog the gap in supply of materials by using technology, and particularly using recycling as an area to get things up and running, avoiding the major permitting issues which have been an issue in the sector. So we have a lot of key value catalysts. We make announcements quite regularly as our projects progress. And we're starting recently, despite the more difficult market environments, to see some response. Our stock is going up, but we think it's still very significantly undervalued. Myself and other board members have 60% of the stock, and we are continuing to invest with the visibility we have of the potential for the business. And we have great partners who are endorsing the strategy and also the investments we've made. We're also in partnership now with the University of Birmingham, and we're looking to expand our partnerships to include other research institutions in North America and Australia, so that we have a continuous, great flow of deal opportunities. And so far, we've looked at around 300 different tech opportunities, and we've invested, in 3 of those, and are looking closely at a 4th. So we quickly canter through the different groups. We're super excited about Magneto, which really can take a magnet out of a hard drive, put it through a very green process using hydrogen, and extract a dust, which it can then reuse to make magnets from that. And that is a super green way of creating new magnets. And given the embedded universe of magnets in the US, we think that it will be a great help to increasing the US self-sufficiency in this area. And obviously, we're getting a lot of interest from lots of parties who want to work with us, and we think this business could be quite an early candidate for an IPO or a de-SPAC, and it will have considerable value. Conceptually, we plan to have a hub and spoke operation in the US, and we're starting to work on the studies and speaking to the US government and other parties about that, and we think it will be able to produce a lot of the magnets that the US needs. Those who are interested can look in some detail at this presentation, which will be online on our website. But it's very quick to get into production, and this technology has already been supported by the UK government and the European government, both of whom are building large plants, which is why we're getting revenues already starting this year and next year in Germany. So we think the opportunity to get revenues from the US will be quite rapid. Then if we turn to our green iron area, the binding solutions technology, it shows here, almost 98% lower carbon emissions, 95% less energy usage because we don't use heat when we are developing the pellets, which are necessary for green steel. We just had an investment from a very large Australian conglomerate who are going to really turbocharge the development of this business. But what's interesting for CoTec is taking the technology and applying it in jurisdictions on a joint venture basis. And we are therefore have been very excited to announce the first of these opportunities, which we've just finished drilling. And we are very excited to have the results of that by Q1 of next year. So that's pretty quick for a mining business. And this asset alone could be worth multiples of CoTec's current market cap. And we hope to roll this out in a cookie-cutter way with multiple sites. So our iron ore division, if all goes well, alone could be worth between $500 million and $1 billion quite quickly. And then we have another investment where we plan to apply this technology, which is our mag iron investment in Minnesota, where it's a restart. The project has a $2 billion NPV. We own 17% of it. There will be some dilution, but it has a lot of upside, and we're super excited to be part of providing and creating green steel in the Midwest for the U.S. economy. And then finally, as I mentioned, we have this revolutionary copper processing technology, which has been invested in by BHP as well as other industry players. And we're now looking around the world, but probably in North America, South America, for asset opportunities. A similar technology called Jetty Resources recently raised capital at a $2.5 billion valuation. Our technology is behind Jetty in its evolution, but we think that it has higher recoveries and faster recoveries and more predictable recoveries. And we invested at a fraction of that valuation. So we see a lot of upside here as well. And the next page that I'm showing you shows why we think it's the lowest carbon, fastest and cleanest process of getting the copper out of the ground. And copper is obviously a very hot topic and a strategic mineral for the US. So we see a lot of upside in our stock. Just the technologies alone, plus our tax breaks are more than our current market cap. But the real gravy will come through from these joint ventures and the assets which we own, and they're not reflected at all currently in our share price. And they are potentially the way in which we will have a 10x or more as we roll this out and become a major asset producer, super green asset producer, responsibly extracting commodities. The stock has traded up a bit recently, but the market cap continues to be tiny relative to what we're achieving. The board and myself in particular are very happy to continue investing in and supporting the business because we can see the road we're on, the path, and the value that can be created. Other themes that we've been looking at are graphene and graphite, green cement, green iron ore, other ways of concentrating materials and avoiding the heat associated with concentration. So, you need to wait and see for the next announcements. But safer to say we've been on this path for 18 months. We absolutely convinced we're on the right path. We see a direction to create vast amounts of value for the shareholders, and of which we are significant, and also to do real good for the planet and help in this transition by creating the critical minerals, but by also doing so with much lower carbon footprints. The binding solutions technology, if rolled out globally, would remove 1% of the world's carbon emissions, but that's just one technology. So we think we're still at the ground floor. We're at the beginning of what is going to be a very interesting journey, and there are lots of catalysts going forward to add value. And all the projects are pretty advanced. We don't do that, invest at laboratory stage level, and we help the technologies move to the next stage. We think that we'll have a great couple of months and years ahead of us as we scale something really interesting for the sector. So thank you for your time, for listening to the story, and I'm happy, Anna, to take any questions anybody might have.
Thank you, Julian. Yes, I'd like for you to talk a little bit more about the carbon savings of these technologies, and specifically how they're going to impact the businesses.
Well, at the moment, we've been making investments really where they stand on their own feet without taking into consideration the enormous carbon savings and the tax credits, which I think will develop over the next couple of years. But obviously, to the extent we can create much lower green copper, green steel, and recycled green magnets, which have a fraction of historic carbon footprints, we think that's a good place to be. And we're starting to do the work with analysts on what the overall carbon savings for the CoTec offering are.
Perfect. Thank you for that. So if my understanding is correct, Julian, you're saying CoTec is expecting to create multiple streams of cash flow from each of these projects, and you gain the rights to a technology, then find a copper or iron asset. Is that correct? And you apply the technology to the asset to make it produce more efficiently. Can you confirm if that's correct and explain that in better detail?
Sure. Yeah. I mean, not only efficiently, some of the assets that we're investing in, and a large focus of what we're doing is waste and waste recycling. And previously, those assets had been disregarded as being, liabilities, problems, and, rubbish. With these technologies, we can take that waste, we can recycle it, reprocess it, and create real value from it. But because it's waste that's already been mined, we don't have to go through the carbon creation that's associated with mining. So we can really extract value from something that was not economic before. And then we can also reduce the liability associated with a waste site. So on the waste side, we're actually not really improving, we're creating an opportunity. But as you say correctly, we can also use those technologies to make existing mining operations more efficient, lowering their carbon footprint and lowering their cost base.
Thank you for clarifying that. So with this recent DTC eligibility that was approved yesterday, congrats. I can buy, sell shares through my online brokerage. Is that how it works?
Yeah, I think it was very hard to trade our shares before this. Now people can use their online brokerages to buy and sell shares with faster settlement and much broader market access. So, this really, previously you needed to have physical certificates for our shares on the OTC exchanges. now we can have electronic trading and transfer of securities. So it is a big step for us, and for investors, it will be much easier now to get involved in the story going forward.
Perfect. And as president and CEO, what are you most excited about in the next 6 to 12, 18 months?
Well, I mean, we are doing so many exciting things. The new technologies we're looking to invest in are exciting. Announcing how we're getting on with our first Lakshanine site with iron ore will be great. More collaborations, more iron ore sites. Our first copper site to show this Sabo technology. Getting funding from Mag Iron. We are super busy on multiple work streams, but they're all going in the right direction. And, I think we're building something really important and significant here.
Wonderful. A few questions from our audience as well. Terry Pena asks, which commodity specifically are you focused on, and who are the customers for your end products?
Well, at the moment, we have three divisions. We have iron ore, copper, and rare earths. So they're different customers. I mean, for green iron ore, steel manufacturers, particularly in the US, would be the end customers, but also global trading houses. For copper, equally, people in Asia, manufacturers in the US, and trading houses. And then for the rare earths, it's really particularly interesting to the Department of Defense, to the Department of Energy, to original equipment manufacturers, to Tesla and GM, and the recycling aspect is very interesting to consumer electronic companies, to an Amazon. So there are many customers for these three divisions, but we are looking to expand into other areas strategically as well.
Perfect. June wants to know, how far away are you from your copper extraction?
Well, we only announced the investment in Sabo a couple of months ago. Generally, what we've seen is it takes us 12 to 15 months to identify the first asset opportunity. So I would imagine that we will the middle of next year, and then depending upon whether that's a new opportunity or a recycling opportunity, that will dictate how quickly we subsequently have revenues.
Perfect. And Guy Rowe asks, how are you acquiring your raw materials to break down or recycle, and what is your cost? So
generally, I mean, that's one of the great advantages of our waste model. The first opportunity that we're working on in Canada, where we'll have a majority stake, the entry price is pretty low. It's a few $1 million for a project which hopefully will have a NPV of $200 to $250 million. We'll have to invest in it. But when you acquiring waste, unless you have the technology to unlock that, it doesn't have much inherent value. In fact, it probably has a liability associated with it. And so with the technology, we can get really good entry prices into assets. And having been an investor in the natural resources space, for the last 20 years, the best way of making money is to buy cheap. And with technology, we can unlock the potential of assets which have been dismissed by investors historically, and have been considered to be of little value. That's really our main strategy.
And a follow-up question from Guy. He wants you to clarify, how will you sell your end product? By the pound, by another metric? And do you have a breakdown of cost versus revenue estimated?
Well, I mean, it depends on the commodity. Some commodities, are sold by ton. Some are sold by ounce. Some are sold by pound. It's really different metrics depending upon the particular sector. But as I mentioned, the technologies allow you to have lower mining costs, so we expect, or extraction costs, so we expect that the margins of our operations will be quite high.
A few questions from Gary Reeves. Let's see how many we can get through due to time. In regards to the mag iron valuation, Gary says, we have taken a 20.6% stake, which was initially valued at around 20 million USD, give or take. How much do you believe this has increased to date? And what is the next catalyst for a further valuation increase?
Well, I mean, we are looking at that, obviously, because we want to give the market a accurate assessment of what the current value of our investment is. Given, we negotiated our investment into mag iron or magneto rather, because I think he's talking about magneto, quite a while ago, and there have been lots of positive developments in the story since then. So it's something that we are assessing, and we'll make an announcement once we've come to a conclusion.
A second question from Gary. What is the current price of a magnet, and how profitable will these magnets likely be? Also, are there other territories like Canada, Japan, or Australia where we could establish further plants and funding?
Absolutely. I mean, we've been speaking already to the Japanese, and we're also exploring opportunities in the Middle East and Canada as well. They already have operations being developed in the UK and Europe. There are different types of magnets, and they have very different pricing, so it's difficult to generalize. But again, we think that by recycling existing magnets and not having to process the rare earths, which is super complicated and very expensive, we'll have a significant cost advantage.
And last question from Gary, and last question for our time. When do we anticipate first revenues? Makengo said they expect first production from their UK plant in Q4 of 23. How much revenue can we anticipate from this next year?
Yeah, as I said, I think we will be able to start recognizing some revenues this year, but they'll be tiny. Next year, they'll have a full year of operation. Plus, they'll be starting their German operations as well, so you'll see much more revenues that year. But what we're mostly interested in is, scaling the business into the US. That has huge potential. That will take probably 2 years or 2.5 years. So for us, the major revenues should come through in 2025 or the latter part of that year, depending upon how the project evolves. But that's going to be very important for us.
Perfect. Julian, thank you so much for your time and these updates. We look forward to seeing you again in the near future.
Always a pleasure. Thank you.
Thank you so much. Okay, stay with us, everyone. We'll be right back.